Hey guys, Jeff with OptionBoxer.com. I have a trade for you today on Conagra Foods, ticker symbol CAG. So let's make a trade. Before we get started, please know I'm not a registered financial advisor and this is not a recommendation to place this or any other trade. Please conduct your own research prior to trading. Now, looking at Conagra Foods, I'm compelled to place a bearish trade for several reasons. First, prices dipped just below the 9 EMA line, which is a trigger I use to indicate when price may continue in one direction over another. It isn't perfect, but I found it to be more accurate than not. So if you take a look here, you can see price is just below the 9 EMA. Second, RSI is looking like it's coming out of an overbought region. Third, the stock is currently within a low volume node area, meaning it may not find stronger support until it reaches somewhere near the $39 price point. If we come over here to our tools and we add a price level, we can see currently price is entering this low volume area. You can see the low volume area here. Looks like it won't find meaningful support till somewhere around there. And it's hard to see that gray line, but that's about 39. And it's also in line with this recent high here. So I expect price might push down into that. You'll also notice that that's in line with this expected move range here for the week. So price may try to dip down and touch this $39 level somewhere in there. And if it does, then we'll reach our profit target. Fourth, volatility seems to be increasing and we may be in for a reverse from the overall market. So if we take a look at the VIX futures, we can see they're coming back just a little bit. So from the S&P chart, you can see price is right at this 200 period moving average line, which means it may fall down from here. And if it does, Conagra will, of course, face some bearishness as the overall market falls. Appears to be a strong divergence from the TTM squeeze indicator. Unfortunately, price has already retraced a few points, so that could hurt us if the uptrend here continues. But for the minimal cost, I think it's worth the play. And you can see the divergence here. You can see price has continued higher. Sorry, I hit the button. And you can see the TTM squeeze indicator is moving lower. So that could indicate a divergence happening and could mean prices will accelerate to the downside. If we move over now and take a look at my own stock evaluation tool, it looks like Conagra Foods is marginally overpriced, currently with the analysis suggesting a preferred buy price around $29.50 and the current recommendation of wait. Additionally, the spreadsheet certainly isn't perfect and CAG could absolutely continue its march higher, but it's always nice to have additional data to confirm our directional bias. Lastly, looking at the standard deviation channels, price has clearly reached an area well above the yearly channel, which would suggest that price may come back into line by falling below 39 in the days ahead. You can see it's breached the 1 standard deviation channel and the 2 standard deviation channel. Price may want to come back into line somewhere in this 1 standard deviation range as we continue forward. With all of that, I'm looking at a bearish put spread to take advantage of the potentially short-term falling price in Conagra Foods. I should pause to also let you know I like this company long-term and I do believe they'll continue higher. That said, I'm targeting a holding period of no more than a week, 7 days, with a profit target around 45% and a trailing loss target of 30%. I don't often use stop orders as I've been burned by them in the past, but I'm hopeful the trailing stop will help sideline or mitigate some of those problems as I've typically just used limit stops. So you can see here on the screen, I've got $25 as an entry price. I didn't change that price at all. We've got a 45% profit target and a 30% trailing stop loss target as well. I'm looking at the 39-38 bear put spread at 32 days to expiration. This should help to avoid much theta decay with the short time horizon. If we move over now and take a look at the Analyze tab, we can see the atrocious probability of profit that exists at expiration. You can see that there's only 11.97% chance that this will end profitably. This highlights that the market is not expecting CAG to go down and stay down. However, prices fluctuate as we all know, so my hope is to operate within these fluctuations to reach a modest price target. Should I be able to reach the 45% profit target, I'll earn $11.25 and we can see that here. If it gets down somewhere near $30, I'll earn about $11.50, $11.25. Should I be stopped out, it could be at any price up to the maximum loss of $7.50. So the most I'm willing to lose on this trade is $7.50. And you can see that happens somewhere near $40.60. And we'll take a look at the chart. $40.60 also happens to be at the upper range of this expected move. making this a very small play to add to my options and dividend income for my new focus on options trading isn't to make a nice large trade, as I know we all want to. It's to add small dollar amounts on each trade as sort of an additional dividend to the portfolio. With that, I think we've covered all the bases. I'll route this order tonight. I'll wait for it to fill, and I'll hold it for a few days to see what happens. I'll return once it's complete to discuss the outcome. See you soon. Hey guys, welcome back. Well, things went really well on this one, and we were able to close our trade in Conagra Foods for a profit of $9 or 40.9% prior to commissions. I'm happy with that return, but looking at how the market in Conagra performed today, I of course wish I could have taken advantage of this large downward move. I think what I'll do going forward is I'll open 2 lot positions. That way I can close one at the initial profit target, kind of redefine my stop loss, and let the second trade continue running in case price continues to move lower as it did here. I was relatively confident in this trade with the overall market. If we take a look at SPY was trading up into this standard deviation channel. I was relatively confident this trade would work out with the overall market here suggesting some weakness. SPY hadn't traded above this channel in well over a year, so I was confident that it would hold, but I didn't expect quite the downside that we got. I didn't see much positive news coming out from the economy, so I didn't think that this would breach the standard deviation channel line here and continue higher. Of course, if it had, there's a fair amount of resistance potentially in its way to keep it lower. I didn't know if we would get the downside move this quickly, but it came a day after we entered the trade, so it kind of worked out. If we go back to Conagra Foods, we can see it worked out pretty much immediately. We got in yesterday, and then today, of course, the big decline. Admittedly, we got a much larger move than I expected, but of course I was happy to see I'd correctly predicted the direction and more bullishness didn't follow. You can see we've got a nice bullish trend here. It's kind of emerged. I was happy to see that the trend didn't continue and we did get the bearishness I had hoped for. Of course, again, I wish I could have held on a little bit longer. But all in all, I'm very happy with the 40.9% return before commissions. That said, take out commission costs, and I only really took home $6.34, which is hardly much to talk about. However, I see it as just one more dividend in my dividend portfolio here. And if we take a look at the trade history, you can see I bought it for 22 cents and I sold it for 31 cents. So not a large dollar amount trade, but it is just a little bit more into the old dividend coffer. So I'm very happy with the way it worked out. I do hope you enjoyed this video. If you did, please consider liking and subscribing to it. Every single like or subscribe really helps me. I appreciate you guys watching, and until the next trade, take care.